Welcome to The Explainer. Today, we're digging into a really fascinating day in the market, one that was defined by this powerful tug of war between two massive opposing forces. It was a day that left the market completely torn about where it's headed next, and we're going to break down every single piece of it for you.
Okay, let's dive right in. The entire story of the day really just boils down to this. On one side, you have the AI bull, this powerful tech-driven narrative pushing the market to unbelievable new heights. And it was fueled by some pretty undeniable proof of a huge spending boom. And then on the other side, you've got the Fed bear. That's the macroeconomic reality check from the Federal Reserve, basically telling the market, hey, slow down, the era of easy money is over.
And you can see this split perfectly in the day's final numbers. I mean, just look at this. The tech-heavy NASDAQ, it surged a really strong 0.71%, but the broader S&P 500, it finished almost totally flat, down just a tiny fraction. The Dow was barely in the green. This tells you everything, right? This is not a market moving together. This is a market getting pulled in two completely different directions at the same time.
So here's the game plan for today's Explainer. We'll start with the AI bull's big move, then we'll look at the Fed bear's reaction. We'll also cover a political wildcard that just completely shook up the currency markets. Then we'll give you the final verdict on the day's winners and losers and wrap it all up with a strategic playbook for you.
All right, let's kick things off with Act 1, the AI bull's charge. Now, the crazy optimism we saw in the morning, it wasn't just wishful thinking. Nope. It was all sparked by one absolutely mind-blowing number from one of the most important and maybe one of the least known tech companies on the planet.
Okay, get a load of this number. 132 billion euros. This was the value of new orders, what the industry calls bookings, from the Dutch company ASML. Now, if you're not familiar with them, just know this. They make the super complex machines that are mission critical for making the best chips in the world. So these bookings, they were a direct look into the future of tech demand. Now, to really get why this was such a bombshell, you have to see what the market was expecting. Analysts were already feeling pretty good, right? They were thinking maybe 68 billion euros in bookings. ASML didn't just beat that, they shattered it. They almost doubled it. I mean, this was the moment everyone realized, okay, this AI spending boom, it is the real deal, it is not slowing down.
And of course, this wasn't just about ASML. It sent this massive ripple of good vibes through the whole tech world. The main semiconductor ETF, that's SMH, popped 2.3%. Big names like NVIDIA, Intel, they all got a boost. The momentum was so insane, it actually pushed the S&P 500 over 7,000 for the first time in history. Now, it didn't stay there, but still, what a moment.
But just as the party was getting started, the Federal Reserve walked in and basically turned off the music. They dropped a huge dose of reality on everyone, and that set up this powerful counterstory that completely took over the rest of the day.
And you know what? It all boiled down to just a few words in their statement. When they upgraded their view of the economy to expanding at a solid pace, that was code. That was the Fed telling the market, hey, things are strong. Don't expect any rate cuts from us anytime soon.
And if that wasn't clear enough, they made this tiny change to their statement that was actually a huge deal. You see, for months, they kept talking about downside risks to jobs. Well, guess what? In this statement, that phrase was gone. Poof! For traders on Wall Street, that was it. That was the nail in the coffin for a March rate cut. Hopes were officially dashed.
So naturally, the bond market, which obsesses over every comma from the Fed, it reacted instantly. The 10-year Treasury yield climbed up by 2.2 basis points. And what that really means is that investors were all thinking the same thing. Well, those rate cuts we were hoping for, they're getting pushed way further out. And that higher-for-longer idea basically put a cap on how high stocks could go for the day.
Okay, so you've got this epic battle between the AI bulls and the Fed bears. You'd think that's enough drama for one day, right? Wrong. A political wildcard got tossed right into the middle of everything. A quick comment, and suddenly currency and commodity markets went completely haywire.
It was just a simple, direct comment, really. President Trump was asked about the dollar and just said a weaker dollar is good for business. Now, to you and me, that might sound fine, but in the world of global finance, that is a huge deal. It's basically saying we want our currency to be worth less, and that sent traders into a total frenzy.
And look at the chaos it caused. The US dollar index just tanked. And when the dollar falls, what happens? Well, other things that are seen as real money go up. Traders call it the debasement trade. So gold shot up 1.5%. To a new all-time high, by the way, and Bitcoin jumped too, getting back over that $90,000 level.
All right, so after all that, The AI hype, the Fed's reality check, the dollar drama, where did we actually end up? Let's pop the hood on the market and see what was really going on underneath it all.
You know, this chart of the S&P 500 sectors, it tells you everything you need to know. That huge slice there for tech, that was the story. Thanks to ASML, it was the hands-down winner. But then look at the other side. Healthcare got absolutely hammered. It was the biggest loser, and it wasn't even close.
So why was healthcare so weak? Well, it all came down to one surprise announcement from the government about Medicare Advantage plans. Basically, the rate increase they announced was way lower than anyone thought. It was pretty much a freeze. And that just created panic about how much money these big insurance companies were going to make. The result? A huge sell-off. United Health, one of the biggest names in the Dow, got crushed. It was down almost 19% at one point. Ouch.
But here's the really wild part. Despite all of this drama, a grumpy Fed, a falling dollar, a whole sector getting wiped out, investors were still feeling great. The Fear and Greed Index was flashing extreme greed. And the VIX, the market's fear gauge, super low. It's like nobody was worried about a thing.
So this all leads to the big question for all of us, right? How in the world do you invest in a market that's this torn? Well, today's craziness actually points to two very different paths you could take. Let's break them down.
It really comes down to a choice. Are you going to go all in on the AI bull narrative, betting that the incredible growth story confirmed by ASML is the main event and it's just going to keep driving returns? Or do you play defense? Do you worry more about the Fed, about politics, about all that uncertainty, and build a portfolio to weather a potential storm?
Okay, so the aggressive playbook is all about riding that AI wave. The thinking is pretty straightforward. ASML proved this isn't a fad. It's a multi-year supercycle. But, and this is a big but, the risk is that expectations are now through the roof. We saw this with Microsoft. They had solid earnings, but the stock still fell because they didn't exceed the market's wildest dreams. So if you're going this route, you could look at SMH for direct exposure to hardware leaders, or maybe IGV to bet on a software comeback.
Now, the defensive playbook is totally different. It's all about protection. The idea here is that dollar weakness and global tensions are going to keep benefiting real assets like gold. The big risk? A policy U-turn. A surprise hawkish move from the Fed or a change in the White House's dollar policy could cause assets like gold to get hit hard. For this approach, you might think about GLD for direct gold exposure or an ETF like SCHD, which holds those quality dividend-paying companies that tend to be more stable. So when you step back and look at it, this one day, January 28th, it was like the entire 2026 market in a nutshell. The market has a split personality right now. On one hand, it's screaming that the AI revolution is real, it's happening now, and the growth is tangible and massive. But on the other hand, it's whispering that the days of easy money are long gone, the Fed is not your friend, and politics can throw a wrench in the works at any moment. And that leaves us right here, with the one critical question that every investor has to be asking themselves. In this massive tug-of-war, which force is ultimately going to win and define where we go from here? Is it unstoppable AI optimism or unwavering Fed realism? Thanks for joining this deep dive.